Over the last 10 years, investors have found it harder and harder to make returns due to the volatility in financial markets and record low interest rates. What this has done is create huge popularity in fine wine as an investable asset class. The reason fine wine has become so popular is because it has some unique characteristics, unlike other asset classes, which allows fine wine over a long period of time to always increase in value. Fine wine supply is fairly niche compared to global investments in the financial markets that are available to us as private investors. The total value of wine traded on the secondary market is around $6 to $7 billion a year, plus another billion a year in new vintages that come onto the market. What that means is that it offers private investors the liquidity to put their money into this marketplace, so you can enter a marketplace that is uncorrelated to the financial markets because it doesn't have the institutional investor funds at play and you only have private investor capital. These top-end producers of fine wine are producing as little as 1,000 cases a year in places like Burgundy and Napa Valley. In some of the top-end and most famous Bordeaux producers, roughly 13,000 cases a year. All these top producers in Bordeaux are under strict EU laws with a limit on the number of bottles they can actually produce each year. Wine has this unique characteristic in that it's being consumed every day. People are taking delivery of that wine and popping corks. The supply of every vintage will eventually decrease to 0 bottles because it's a consumable product. In the end, the finite supply will drive pressure on the demand. Even more so now that there are far more millionaires and billionaires in the world and up-and-coming wine-consuming places like China, where there is an even ever-increasing thirst for high-end fine wines from top-end producers, and the demand in Asia to show off one's wealth, of course. Fine wine appreciates in quality over time, so you have an even greater demand for older vintages as they become more scarce in the market. Just these simple criteria of supply and demand allow fine wine prices on average to always increase in value over a long period of time of 5 years or more. This offers investors an amazing opportunity to invest in a physical, tangible asset similar to property, with the added advantage that the bank cannot come and take away your wine, like for example if you failed to pay your mortgage. Because the top-end producers in the world like Lafite Rothschild have been making and selling wine for hundreds of years, I can say with absolute conviction that a case of fine wine like Lafite Rothschild will always have a value. Even if you look at the history of the worst depression, wine was still traded. This you cannot say about investments that are tied to the stock market, where a company can go into liquidation and its share value becomes worthless overnight. In fact, in light of our recent global crisis, wine has increased in online sales by 68%. As we see more and more companies going into liquidation in this crisis, this could be more apparent to stock market investors and a knock-on effect to the property market. Unlike stocks and shares, fine wine has these unique qualities to provide investors with solid and stable returns over a long period of time, also ensuring they are protected throughout their whole career of investing.